But stock of the day, in fact, we've got two because there is a lot happening in the M&A space. Origin Energy has received a non-binding conditional offer from Brookfield Asset Management. It's a $9 a share offer following an earlier proposal from a consortium to acquire Origin for $7.95 a share. That was in August. So the current offer valuing Origin at more than $18 billion. It's set to grant the consortium the opportunity to conduct due diligence in order to put forward a binding proposal. We're also going to talk Perpetual, but let's get some view then on Origin. And Ben, just looking at the current share price, what, $7.84?
Yeah, so I mean, the board have said that they'll recommend this bid if it becomes binding, so it's only indicative at this point. But there has been some limited due diligence, it sounds like, being done. So I guess, I mean, to me, the shareholders will take this money and run for the hills. You know, this is an incredible get out of jail free ticket for Origin shareholders. I guess the market's reflecting some concern that as Brookfield does proper due diligence, goes through the books, it might see some things that look at it and go, because they're allowed to just walk away under the terms. So I guess that's kind of why there's still a gap between $9 and $7.82. But it's, you know, it's at a Canadian friendly buyer, it's the right buyer, and it's, you know, a great price, I think. So it seems quite generous to me. So I think if they don't see any gremlins in the books, this goes through for sure.
Yeah, but I mean, well, you talk about gremlins, it's such a dynamic sector at the moment, isn't it? There is so much happening, so potentially there could be some problems there. Grady, what's your view?
Exactly the same, but it's interesting to note this is the third offer revision that they've received from the same parties, and Brookfield, knowing the management is global, they will take it offshore. So it is really interesting to see, but it's also interesting to note that Brookfield said it would invest an additional $20 billion to fund Origin's clean energy transition plan. So they're already on board with Origin wanting to get out of that coal-powered fuel, and they're wanting to go clean. So they've done a bit of their research, knowing exactly where Origin wants to go, and they're supporting it. So Stuart Upson this morning, for Brookfield's Asia Pacific Chief Executive, has said the energy transition in Australia presented a once-in-a-generation investment opportunity. So I don't see why this won't get done. Yeah.
All right, watch this space. Also, of course, now we have been visiting this stock on and off, given what's been going on with Perpetual. It has now rejected a higher $1.85 billion bid from Barings Private Equity and Regal Partners. Perpetual saying the revised bid continues to materially undervalue the company, and shares currently up close to 7% today. This is, I guess, it's something of a, well, for want of a better term, a love triangle, isn't it? Because you've also got Pendle in the mix as well. Grady, how do you view what's going on here at the moment?
Well, Bell Potter actually maintains a buy rating on this stock, and it's really, I was reading through the research before I came through, and it said that the rejection seems clever. And they said it's clever because some of Perpetual's shareholders were upset with the Pendle offer, saying it was too big and it overvalued the company. But now it's clever because the second rejection of this takeover kind of gives a bit of leeway to kind of dampen the ground a little bit and soften the blow when the Perpetual hopefully takes over Pendle. So I don't know if they'll go again, but if we're seeing with the same as Origin and the Brookfield and Origin, it could be a third time lucky. So yeah, it's a buy rating from Bell Potter at the moment with a price target of $38.73.
Yeah, Ben, well, similarly, I guess, you know, it's pretty dynamic at the moment. So how are you watching it?
Well, I think they've done a really good job jamming Perpetual, because everyone hated, from what we hear, a lot of the Perpetual shareholders did not like the Pendle deal, and a lot of the hedge funds were shorting Perpetual and going long Pendle, which pushed the share price down, and then they've come in at a great point. They've got dissatisfied shareholders, they're buying at a depressed share price. If you're a Perpetual shareholder, I think you'd be tearing your hair out, because this really has not played out well. I mean, if Phil King can pull off this deal, I think he's done an incredible job. So, you know, I'd probably stick with it. You know, I think they're genuine. There's always been seen to be value splitting up Perpetual, and it's still trading quite a big discount to, you know, the current bid on the table, and there could be others to come in.
Yeah, absolutely. So once again, watch this space, because yeah, it appears there's still a long way to go on those particular deals.